I know you've had to pick yourself up a couple of times. So what is it like on the road to becoming a successful trader and a guru like yourself?
Well, I don't know the word guru, but I'd say as a trader, we always have some demons. We have to face them. We will have some setbacks. I've had my own fair share, and I'll have some more. There's no end to this. When you sit at a table, in Vegas, the house has the odds. It's no different here. Yes, you can probably manage these odds a little bit better, but if you play long enough, you get into trouble. Okay? It's nature of the beast. And getting over that initial curve is not easy. And as you get to that point, I think a sign of maturity, a sign of learning and understanding yourself and dealing with yourself is to play for a smaller range size, if you will. Mm-hmm. And when the confidence is there and when the conditions line up like it was yesterday in the market, I tend to press it. Don't press it every day. A lot of times you'll see I'm taking very short bursts for a few contracts, as I said, trying to make some soup money, mm-hmm. pay for lunch. But when conditions line up and your market timing and your doing the homework that you did the night before, your preparations and so on, line up with your chart expectations during the day, listen, that's the time you gotta press it. That's the time you gotta take the charge of the moment and go for it. But along the way, there is always the risk of ruin, ROR. There is always problems with exogenous news, problems with disaster stops you have, problems with, like last night, there was an alert on. I usually keep a laptop next to me on a nightstand. I took a look, it was 3 a.m. Chicago time, which is if you go to your table, you see it will be 9 o'clock London time. Mm-hmm. So London was opening and they sold the market heavy. So, there's always overnight risk. Now, of course, I was flat, but the alerts kicked in and I just woke up, took a look at it. Mm-hmm. I said, okay, I know where this thing is. I know what this is doing. Kind of waited a few minutes, make sure it wasn't anything outrageous. Being a veteran of going through the long-term capital market, mm-hmm. I went through that live night and day. The 2001, 2002 debacle, again, with futures. And then 2008, where majority of the money was made at nighttime, not during daytime. Yeah. Because it was such a global event, the pressures were so big. In 87, I was basically out of the market. I was at cashed out first of all, I was not trading. I was really investing. And I cashed out my dad, much, much earlier just because I felt things were frothy. Mm-hmm. And actually I saw 87 live on TV, just basically a TV station in LA was reporting and I was at awe. I'd taken a day off that day by chance and could not believe what was going on. So, but basically what you do is over the time, you get more mature, you slow down in certain things, you don't press buttons that fast, you respect cash, you try to keep yourself nimble and agile, do not try to impress others with the size you're trading, instead have respect for the money that's there in the account. It's very easy to lose. Gaining money is very slow. If you think about it, if you want to think about it, if you had a long-only bias, it's easy to explain it. It's like a up escalator versus a down elevator. Yeah. It takes you a while to get up to the account equity, and a couple of mistakes you can lose it. Markets have randomness in them, and there's the fear and greed, and the fear always is faster than the greed.
How long did it take you to reach your confidence level that you have now?
The confidence level is not ever increasing. Mm-hmm. The confidence level is like a chart itself. Okay, that's one thing. In the first 2 or 3 years, it was a zero. Confidence level was zero. Simple. I mean, the industry data shows in the futures your most likely survival period is about 6 months. And you get blown away. Okay? And I was there in 93, 94, 95, and I blew a few accounts away. Okay. I think my first challenge was in 98, long-term capital. And part of it was the way things were. I mean, we were trading SP, the big contract, over the telephone. Okay. And there was no ES, there was no electronic trading per se, You have to call it in. And they would give you confirmations by fax what your positions were at the end of the day, type of a deal. It's just very different than now. And then I had a chance to see the floor with the work I did with Louis Porcelino and Brad Sullivan. When I came in to see the floor in Chicago, I freaked out. I mean, I simply freaked out. It says, well, you see the chaos, the zoo. 500 people there yelling and, going back and forth. It's an absolute chaotic zoo in there. And my order or your order, where we phoned in, is coming in from somewhere in the bleachers where the brokers are standing, by a runner into their representative, their trader, in the floor, traded in the pit, traded, and then confirmation going back up. So for every trade, and in and or out, there are two runs this has to be made. So the delays that were involved, and you would understand now why sometimes you would be on the phone waiting, and after a while they tell you, no fill. Huh? And in the meantime, market has moved. Thank God now we have this ES, much smaller. It's not $500 a point. It's $50 a point. And the big one is the SP now is 250, so 5 times the size of ES. But a lot of liquidity, and there's accountability. Because there's accountability, there's more liquidity. Okay? That's key. Before you didn't have that. I think great building period for me, kind of stabilizing and building period, was probably post dot-com debacle. 2003, 2004, 2005, that period.
Why is that?
Why? Because first of all, I think I'd been there long enough. I'd been banged around long enough, if you will. And I focused on what things I wanted to have in terms of systems. And a couple of our indicators were finished. And, we've gone through a number of textures, if you will, market textures. So that you understand it from a different time frame, multi-time frame, and multi-texture. So because remember, the market plays a game with you. All these variables are changing at the same time. These are nonlinear systems. If it was simple, everybody and his brother would be doing it. So it takes a while, and you got to learn to survive. If you can survive this period, the cumulative learning will come in and help you. Now, one of my problems was also I was trying to finance the development of the company, the website, the put call ratios on the back end and so on. So a lot of net gains I would have in the market would get dumped into the hand of programmers to keep them happy, keep them finishing what they had to do and so on. And so, but it was all meant to be.